Sean, thank you for your piece. I think my main problem with it is there was no mention at all about one of the principal responsibilities of any government, which is macroeconomic stabilization. Reducing the deficit in itself is not a bad policy, especially when it reaches 10% of GDP, as it did in 2008, 2009. The problem is doing that without any regard to what's happening in the rest of the economy. If everyone else is refusing to spend, if firms are hunkering down, if the government also joins in that cost-cutting exercise, you get deeply undesirable macroeconomic effects. And I think that's the main critique of what Osborne did in 2010, is that he wasn't sufficiently concerned about the state of the overall economy. And he went, as Ed Balls put it, the Labour opposition chancellor, he went too far and too fast. And this pertains specifically to the point you were making about Brexit. I think if Brexit turns out to be as economically damaging in the immediate to medium term as it might be, we're going to need the opposite of austerity. We're going to need the kind of fiscal loosening that we had in the financial crisis and the recession to offset that. So austerity really is over, and Brexit probably makes it even more important that it's over.
Right. Well, I'd say on the last point, it is the other way around, which is that in order to deal with a future economic difficulty or disaster or catastrophe, such as Brexit may be, at least in the short run, or other things that could come along or consequent to it, like a house price crash or something like that, in order to be ready for those things and ready for other things that can come in the future, the prudent thing to do is to create the headroom so that you don't borrow up to the hilt, so to speak, now, and you allow yourself that flexibility in the future. So when the financial crash came along, for example, in 2008, because borrowing was, there was a structural deficit, it's probably too high and so forth, but overall, the British economy and the British public finances had that room to do those extraordinary things in fiscal policy, public spending and borrowing. And also, by the way, on the monetary side with the Bank of England, they had room to reduce rates as well, and to do so safely without really accelerating inflation out of control, although it did get rather high. So that's what I'd say about that. I think that's the sort of fundamental reasoning I've got about the way the public finances are being run, which is this Gordon Brown's old word, which is prudence, to be prudent in your policy. So that's the first thing. Now, the second thing is that, all about Osborne and so forth. Well, that's history, but it's important and recent history. And I think that what was happening in those years was really that they did allow the budget deficit to rise or not come down as fast when things started to go against the British economy. And actually, at least some of that wasn't so much what was happening in a sort of accidental bumbling around way that George Osborne was sort of accidentally messing everything up. It was the Eurozone. The Eurozone had crisis after crisis after crisis. As everyone keeps reminding us, the Eurozone or the European Union is our biggest export market. And it was in real trouble from time to time. You remember the riots, the Greek crises, the banking crises, and so forth. So those things really pushed down British growth, pushed down British exports, and was one of the reasons why the deficit didn't come down as quickly. But what was happening throughout that period, I recall, was that Osborne allowed the cyclical aspect of the deficit to move in line, the automatic stabilizers, as the economists call it, so that when the economy slowed down, he didn't then do what Herbert Hoover did in the early 1930s in America, or what the British government, the national government did, which is to cut government spending. He allowed it to carry on. There wasn't a cyclical adjustment in that sense made at that time. He went with the blows. What was going on then and since is an effort, a gradual and quite slow effort to reduce the structural deficit. So, as you know, this is the deficit that's left over even when times are good. The bit that says that the public finances are really not quite right. And even at the end of Hammond's next forecast in a few years' time, there will still be a small structural deficit, but it won't be half as big as they inherited from the Labour government when it really got rather large. So that's what I'd say about that. I think that the extent to which we had austerity under George Osborne is exaggerated. The extent to which he made the wrong policy choices is exaggerated and doesn't take account of what's happening externally. And I think if you look to the future, you've got to be cautious. You've got to say to yourself, there could be very, very tough times ahead. If we don't have that ammunition in the locker, we're not able to borrow, we're not able to keep interest rates low to see us through those difficult times, then, well, who knows what could happen.
Okay, so on the point about building up a reserve of fiscal strength to be deployed in these circumstances of, say, a chaotic or messy Brexit, I'm afraid the reality is we've got 2 years. We've got less than 2 years. The clock is counting down. The idea that we can bring our national debt burden to where it was before the 2008 financial crisis, I don't know, about 30% of GDP or whatever it was, within that timescale is just not going to happen. The idea that we can build up that fiscal strength within the time we need to do it is not going to happen. The deficit is about 3% of GDP roughly now. It's not out of hand. I think that gives a sufficient store to fight fire. We're not going to suddenly go bankrupt if we loosen off austerity now in a way that is often described by the Chancellor and others. So I think in an ideal world, yes, of course, you would have stronger public finances, but we are where we are. And the point is that we can still borrow at incredibly low rates. People are still ploughing money, as I said in my piece, into British government bonds, despite all the rapid acceleration in the size of the national debt. So we have fiscal room. I mean, even the IMF and the OECD and all these other venerable organisations say that there is no reason for Britain to be forcing down the size of the deficit at this particular moment. And just if I can finish, there is no reason to believe, this is the argument which was put in about 2010 to 2013, that there was this great danger of a run on British government bonds. You know, any day now, interest rates were going to spike. And this was precisely why we needed to continue with George Osborne's plan. Well, actually, what happened? When, as you say, the cyclical deficit was allowed to rise because the automatic stabilisers kicked in, borrowing ballooned far beyond what was penciled in his 2010 emergency budget. What happened to government interest rate? What happened to 10-year government bond yields? They went down. And this because the feedback effects on the wider economy show that people were actually crying out for government borrowing. The government was picking up the slack in the economy. This whole idea that there would be, as I say, a run on the British government debt was a scare story. And the government, as I said in my piece, should have used that ability of low interest rates to put through a fiscal stimulus, a capital spending stimulus, because you get the most bang for your buck from that particular form of spending. And it was an opportunity spurned, and we were all less well off as a result of that decision by the Chancellor.
But the thing that the markets realised at that time, I suppose, is that this was indeed what the economists call a cyclical adjustment. So they were going with the run of the economy. They weren't trying to push it further into a recession. They were keeping government spending and borrowing up as the recession was coming in to support it. And the markets realised that, and they don't mind so much about cyclical sort of deficits going up for cyclical reasons in that sort of way. They don't sort of object to it because they understand that it comes right the other way when times get better and when confidence is restored, and you're more chance of doing that if you do allow that to happen. So I think there's an understanding of that, and that's why the borrowing was accommodated. But the other side of it, as I say, is an option taken by governments to spend more than they ought in this beyond that cyclical thing, which is this thing called the structural deficit, which is the problem and was the problem in the first place. That's why we had so-called austerity, however you want to judge it. And the structural deficit is actually still there even now and will be for a few more years. And that's the thing that has to be attacked, because that's the thing that's not sustainable. And that's the thing that won't have a return on the investment coming in the future. I mean, infrastructure investment by government is is regarded as a good thing under any circumstances. And I don't quite go along with that, because there's quite a few government public projects one can think of that have been entirely wasteful and will never have an economic return. But by and large, they're pretty good value, and they do get a return over a very, very long time indeed. And markets don't mind about that either. But I think where the problem comes, as I say, it's a structural deficit when the money doesn't come back because there's no spending on it. So that means, frankly, spending on public pay, spending on benefits. A lot of the sort of subsidies people get, like tuition fees, they reduce those. Those sorts of things are things that do create a structural deficit where you don't necessarily get much of a return back over the years, and which leave your public finances permanently weaker and structurally weaker. And as I say, the thing that these are not good times when the stock of debt, although our overdraft or our day-to-day, year-to-year borrowing is quite small, the pile of debt that we've got behind us, which has been built up over decades, if not centuries, very rarely paying much of it back, is 86% of the national income. So that's quite a big mortgage for a country. And I think there's a lot of economists who would agree that once you get beyond a certain level relating to national income, it's a bit dangerous.
Well, I mean,
you're quite badly exposed to if interest rates go up, and then in order to try and feed the bondholders, you have to keep raising taxes, which depresses the economies, and then you have to do it again and again and again. Eventually, you go kaput. So that's the problem with a structural deficit.
Yeah. Well, I mean, I presume you're referring to the research by Reinhardt and Rogoff, which says that there's a tipping point once you get above 90% of GDP. Sadly, that's been debunked, that idea that there's an inevitable slowdown or a fiscal crisis once you get. We are not, in reality, out of line with our peers like Germany and the US and France in the stock of debt to GDP ratio. And I think fundamentally, you're still missing the macroeconomic stabilization point. You talk about the market being a bit chary about government borrowing, etc. But there's no evidence.
Some types of it.
There is no evidence
Not the cyclical type,
in the bond markets, in the currency markets, of any kind of fear of overspending by the UK government. And I'm not just talking about because we're following a conservative austerity plan. I'm talking about when that austerity plan went way off course and resulted in much bigger deficits and much higher borrowing.
But I've explained that.
Well, if you,
the stabilization thing was taken into account. I take account of it. And the markets took account of it, and they said, so to speak, that's okay.
But why?
So that was all right.
What evidence do you have for suggesting that if, for instance, George Osborne had taken the advice of independent economists and even the IMF and implemented a fiscal stimulus using capital expenditure to the extent of maybe 2 or 3% of GDP, 40 to 60 billion, which is what was being proposed at the time? Why would that have been a tipping point for the financial markets to suddenly say, we want to dump all our holding of UK gilts and we're not confident in the solvency of the UK any longer?
Because
that would have certainly have helped growth. It would certainly, as you say, have delivered a return, and it would have created a bigger economy. You talk about, remember the saying of Keynes, take care of the economy and the deficit will take care of itself. It's a great line, and it's true. Governments, treasuries must think about the broader economy. They must think about the level of interest rates. Don't forget, we are at the zero lower bound. Interest rates are 0.25%. If you're talking about ability to stimulate, the best thing you can do is stimulate the economy to the extent where those interest rates rise off that low level, so that if we do go into another crisis, you can rely on monetary policy rather than fiscal policy to stabilise the economy, which is what we would all want to see happen.
But the point is that Osborne did do that. Osborne was not an anti-Keynesian or an anti-Christ or something during his time as Chancellor of the Exchequer. Those are exactly the things that he did do.
He didn't do a fiscal stimulus. He didn't do a capital spending stimulus in 2011-12.
The automatic stabilisers so he allowed the deficit to rise when the economy slowed, and vice versa, I suppose.
He wasn't Herbert Hoover, I'll grant you that, but he didn't do as much as he could have done and should have done and was being advised to do.
Right. Well, there you've got a question of judgment, and you would say, and then you start into a journey into parallel worlds.
Yeah, but if he had counterfactual,
they're hypothetical and they're parallel universes. But if he had done that at that point, then the reaction wouldn't have been as violent as you suggest critics say. That's not how it works. It's a marginal worsening in conditions and a marginal worsening of confidence in the future for the British economy and the public finances, rather than a sort of mass panic sell-off rush for the door. But what if he had done that? Then maybe we'd have even less headroom than we've got now. We would have had less headroom last year, the Bank of England also, to deal with the immediate Brexit issue and whatever happens in 2 years' time. The more money you've got borrowed already, the less money, other things being equal, you can borrow in the future in order to deal with an economic shock. And, an unexpected, or actually in the case of Brexit, an expected economic shock. Because the weird thing about a lot of people, with your point of view, is that you think that Brexit will be an absolute catastrophic disaster, and yet you don't want to make prudent provision for it with regard to fiscal policy and have the money, keep the borrowing in reserve, so to speak.
I think you're much too focused on the nominal value of the UK's debt. That doesn't matter. What matters is the interest.
I didn't mention that. I thought it was 86%. Oh, the interest rate.
Well, it depends on the interest rate on which we can borrow. But and at the moment, interest rates are right on the floor.
Yes, but
that's a function of low expectations of growth from international investors and domestic investors, and low inflation.
Yes,
so we have the fiscal room to do what we want to do, to deal with a shock.
Yes.
Because private investors, hundreds of thousands of them around the world, have decided that they are very, very keen to hold on to government bonds, to hold on to gilts. That gives us the fiscal room. People talk about Greece. To your credit, you haven't talked about Greece, but how the UK could turn into Greece if we allow borrowing to explode and to do these fiscal stimulus things. We have an independent central bank. We would never be in a position like Greece, because they are in their specific position, because they were locked into the Eurozone, and the ECB was not performing its duty of being lender of last resort to the members of the Eurozone.
Yeah.
So it was always a false analogy that we would be like Greece. And we have to remember that now when we're facing the possibility of another shock, that we don't need to fear that in that way. We need to take care of economic growth.
But sooner or later, rates will rise. The Americans are already putting them up.
Yeah.
So it'll be a global trend towards higher rates.
Yeah, rates are rising in America because the economy is performing sufficiently well, and inflation is coming back sufficiently strongly for the Federal Reserve to deem it time. That is not the case with the Bank of England. The Bank of England still does not think growth is sufficiently strong for them to raise rates. So it won't happen until the economy is performing better.
You don't know. The problem is you don't know. One doesn't know. One doesn't know if and when the Bank of England, which is already going a bit more hawkish on inflation, I think, if you read those minutes as you do minutely, it's going a bit more hawkish. And there's more people in the Bank of England, and you've been interviewing them, who on balance are moving towards raising rates. And the Americans are raising rates. Then that's the next thing that's going to happen. And you don't know where they're going to go and how quickly they're going to go up and how high they're going to go up. If the Bank of England takes a view about inflation in Britain, which it hasn't done hitherto, it's been very tolerant about it, and that may end. And so if you have rates going up 1, 2, 3, 4, 5% or something, then what happens to the debt burden? Well, we've got a lot of long-dated gilts, so it would happen quite gradually, but the rates would go up. The amount of money we have to spend servicing the British national debt would go up, and it's already more, I believe, than we spend on schools, just to keep this thing going. It would go up and up and up. And then you say, well, how are you going to pay for that? Are you going to raise taxes already? The public don't like it. Tax burden's quite high. Are you going to borrow to pay off the borrowing, and go around in a sort of spiral like that? Or are you going to cut spending in order to do so, which the public absolutely hate as well? So those are the real problems that you've got ahead of you if you don't keep a hard lid on the public finances, a hard lid especially on public spending, and a hard lid on borrowing. You can allow it to move around a bit cyclically, which is what the government has done and every government's done since the war. But you can't allow yourself to do what people are talking about now, which is to scrap tuition fees, to raise benefits, to increase public sector pay, to do all these things that are not infrastructure investment and not to do with cyclical adjustments. They're straightforward increases, changes in the benefits and the distribution of income and wealth in the country. Well, that's fine if that's what people vote for and so on, but they have to know the consequences of it, which is economically ruinous.
I absolutely agree that you can't have everything. And some of the supporters of Jeremy Corbyn I agree with you on that point. They haven't fully grasped that there is a budget constraint out there. But I think it's fundamental, and I wouldn't necessarily argue that there should be a complete lifting of the public sector pay cap or that tuition fees should be made free once again. I think these are priorities and they should be debated in democratic forums, and we must make trade-offs. My fundamental problem with the line of arguing which you've advanced and which you advanced in your column about there being, quotes, no magic money tree, is it's economically misleading. And it's economically damaging because it completely ignores this point, which I keep coming back to, macroeconomic stabilization. You need to be concerned about the size of the economy because it's the size of the debt relative to the size of the economy that really matters, not the nominal value of it.
But it's very high.
It's high, but if you want to bring that down over time, over the decades, you don't need to do it all tomorrow. You don't need to do it in 5 years, which was the other mistake that Osborne made. You can get it on a gradually declining path by having a strongly at-trend growing economy, and the national debt stock will take care of itself. There's been far too little attention to what's called the denominator in this equation, which is the size of the economy. Far too much attention, which I think you're still giving it, to the numerator, which is the size of the debt.
Fair enough. But we can agree, can't we, that Brexit will be quite a challenge.
Indeed.